Here we're taking a look at a concept of unemployment, which is the unemployment insurance payments that governments pay out. Most of us are familiar with these, and we'd like to just know what effect the unemployment insurance payments have on both the unemployment rate and the severity of recessions. So thinking first in terms of the unemployment rate, if people who are unemployed are receiving payments for being unemployed, it seems likely that this insurance payment program isn't necessarily going to decrease the rate of unemployment. Now, it might be flawed to say that it increases the rate of unemployment because I wouldn't necessarily say that people quit their jobs for the purpose of getting unemployment insurance payments. However, it might not have really any effect on this unemployment rate. It may just let it sit idle. So the unemployment rate may increase due to some other factors, but it may not necessarily decrease as a result of these unemployment insurance payments. So we could maybe conclude that their effect on the unemployment rate is not to decrease the rate, right? It doesn't necessarily convince people to get a job because they're able to sit with at least some sort of an income from the government. But it's probably unlikely that the unemployment rate increased as a result of these payments being available. And as for the severity of recessions, we could probably conclude that these unemployment insurance payments reduce this severity of the recessions, right? Because people who are unemployed during a recession, it's not necessarily that they chose to be unemployed, it's just that the economic conditions almost forced them to be unemployed. So the severity of the recessions would be reduced by these unemployment payments because people who are unemployed are then given at least some income to contribute back to the economy. So it helps to keep the economy moving, and we know that that's good during a recession. The fault of a recession is that the economy kind of seizes, or it really drops in its effectiveness. It loses its growth. So these insurance payments allow it to at least pick up some of the slack that it's missing. So we could conclude that these unemployment insurance payments work to reduce the severity of recessions, even though they don't necessarily decrease the unemployment rate.